Yeah, absolutely. I know you guys do too, right? Get out there and start showing and doing things.
Yeah, I have an open house at 2 o'clock, so
Nice.
I'll be getting out there, putting up my signs
Yeah.
and getting
You got
everything
good weather.
ready. Yeah,
Good weather today. You're lucky.
it's a beautiful day for it too.
Absolutely.
So without further ado, let me introduce Chris to you guys. He is with Your Mortgage Experts, and he is a mortgage loan advisor. And I posted his information. I don't know if you guys can see it yet, but I will post it again just so it's there. And his information is there. You can contact him with any questions you might have. So take it away, Chris.
Awesome. Thanks, guys. Thanks for joining on a Saturday morning. It's nice to meet all of y'all. And Vanda, you're awesome. Thank you for putting this together. And you're so organized. I love that. I want to get that little thing that you got in that corner in the picture. That's really cool. That's a cool. That's great branding.
Canva,
Um,
Canva, use Canva.
I love it. I love it. So, just I guess I'll tell you guys a little bit about me. Just kind of have brief background of my experience and what I've done in this industry. I started in this industry in 2000, and I started off as a loan processor, and I got licensed as a loan officer in 2001, and I've done origination since then. Back then it was a lot different, and I know it's funny when I say back then. People say, "Well, you look pretty young," and I am young. I'm 43, but I've been in this industry, on and off for like 20 years. And so I started in 2000, and I was in it till 2009, and in 2009 financing just got really weird. So I got out, and it was actually a good thing though, because I went to go work for a couple marketing firms, and it taught me a lot about branding and web presence and social media, and understanding that aspect of it from a marketing side. And then I got relicensed 2016, and been back doing it since. My biggest part of my business comes from my realtor partnerships. So about 70% of my business comes from realtor partnerships. 30% comes from referral. Word of mouth, my sphere. And what we do, where people always ask me, okay, what makes you guys different? And I was sharing with Vandy yesterday, the biggest difference with myself and my team is communication, and it's going to be over communication. And I don't know if you guys are familiar. So I use a lot of negotiation tactics and skills that I've learned from a guy named Chris Voss. I'm not sure if you guys are familiar with him. He wrote a book called Never Split the Difference. And what he talks about is that every interaction that we have with people, especially if we've never met them for the first time, there's a certain approach that you have to kind of break down those defenses that we all kind of have when we initially talk to somebody. If you've never talked to somebody for the very first time, they're guarded, they're protected with their information, right? And I'm the loan guy, so I have to get all their information. I have to get their social, I have to get their checking account information, the date of birth. I mean, they give me very, very personal information. So I have to make them feel understood. I have to make them feel secure that I am going to take care of them and take care of their needs and fulfill their needs. So, the thing that kind of sets us apart, like I was saying, is the over communication. And what I was sharing with Andy yesterday is that we have systems in place on a weekly basis where we want to stay in communication with you, because you're our client, as well as the homeowner or prospective buyer. So Monday call, what we do is we do like a Monday call, and every Monday we'll reach out to realtors. I reach out to you guys, and it may not be every Monday, maybe every other Monday, but we try to, reach out on a regular basis and stay in contact, and just let you guys know what's going on in the market, if there's any updates, any changes, because things change all the time. Every Tuesday, if we have a contract, every Tuesday, what we do with my loan partner, we'll reach out to everybody on the contract. So that's going to be the seller's agent, listing agent, the seller themselves, if we have information, buyers, and you guys as the agent and the title company. That's just to keep everybody in the loop. That's a very quick phone call that my loan partner makes. Every Wednesday, I send out a bomb video, and I let everybody know what's going on in the loan process, and that goes out every Wednesday. There's also a quarterly call that goes out to past database every Wednesday. And then every Thursday, there's a call that goes out to all pre-approval. So anybody that we have pre-approved, we're making phone calls to them to see if there's any questions. What we found is that people in general won't ask questions, because a lot of times people feel like they're stupid for asking questions. So we want to try to alleviate a lot of that stress from them, and be proactive and say, hey, I know you guys may be going out looking at houses. Do you have any questions at this time? Right. And just trying to really get any information that they need. One thing I was sharing with Vanna too is, like, when we have conversations for the first time with a client, it's not like, what's your date of birth, what's your name, what's your social. It's more like, what are your goals in buying a home? And then we shut up and listen, right? Because people will tell you everything about them if you give them an opportunity. We'll ask them, what's your current living situation, right? We want to know if they're currently renting. We want to know if they own a house. Are they going to have the ability to carry both mortgages? Are they planning on selling a home? We'll ask them, what's their current rent? Or what they're, if they're renting, how much they currently paying? What are their expectations on what a monthly payment would be? If they're saying that their expectations are going to pay $1,500 a month and they're looking at $500,000 houses, then we got to set, their expectations. So that's just kind of like the everyday activities. I don't know if you guys have any questions for that. I guess we can open that up maybe after if there's any questions. But I know Vanda was asking like, so what are the questions that you guys may ask a buyer before sending them to me? Okay, so I think the most really relevant thing is just if what do they think could hold them back from buying a house, right? That's a great question to ask a buyer, and just let them talk. What could hold you back? Buyers won't be specific. I found that buyers for some reason won't tell realtors the full information, but maybe if you ask them in a way like that, maybe they'll give you some information. Really, I do a lot of the interviewing for you guys. That's kind of what I'm good at. And if you think you have a prospective buyer, I don't mind talking to them if you think that there's something there and you think that they're ready. As far as like the questions, I think that's a good question to ask them. What do they think could hold them back? Do they think maybe there's anything with their credit that could hold them back? Do they have any funds allocated towards purchasing a home? Right. I mean, on a $200,000 house, on average, if they're paying, let's say FHA, even conventional, 3% down, 3.5% down, they're probably looking at like at a minimum with closing costs, escrow, down payment, on let's say just a $200,000 house, maybe $15,000. That's without any type of lender credit or seller contribution, right? So just FYI, I mean, that's kind of, if they have $10,000 to $15,000, there's usually something there, because we can get them what's called lender credits if they need help with closing costs. There's things that we can up their interest rate where they can create what's called a lender credit. On the flip side, they could buy down the interest rate if they want to get a lower interest rate. The loans that we offer is pretty much what everybody offers across the board. We have FHA, conventional, USDA, VA. We do a lot of VA. VA is awesome. So if you guys have veterans, we love doing veteran loans. USDA, we've done quite a few of those as well. I think, I don't know how familiar you guys are with that as far as like the ways to get financing, but the way we're set up is I'm under a mortgage broker shop too. So basically, what that means that I'm licensed and I have the ability to broker loans out to several different lenders. And, we have some lenders, I know some of the questions that come up sometimes are, what's like the minimum credit score that we can pre-approve people. So it kind of depends on the person, their circumstances, and the type of loan that they're trying to do. So let's say, for example, like just conventional across the board, the minimum score is usually going to be about 620, just across the board, 620 credit score for all conventional. The maximum loan to value on conventional loans, the maximum loan that you can get on a conventional loan is 97% for first-time home buyers. There's also people who are not first-time home buyers, they can still get that 97% program if they meet income limitations, if they don't exceed certain income limitations. And that's done by county. And I can look that up for you guys if you have anything like that. Excuse me, I'm talking, my mouth is getting dry. Okay, so that's conventional. FHA maxes out. FHA maxes out at 96.5%. The minimum credit score for an FHA loan is 580, and that's with a minimum of 3.5% down payment. But FHA can still go down to like a 550 score, maybe even like a 530. But when you get below 580, you're putting down a minimum of 15%. I mean, FHA's guidelines say 10%, but really, when we run approvals, if you don't have 15% down and you're below 580, it's probably not going to get approved. There's also what's called manual underwrites. And manual underwrites are where, let's say you have an FHA client, and when we run it through Fannie Mae, it comes back what's called referred, meaning that it's not approved. The system, Fannie Mae's system did not accept it, rejected it, basically. There's some circumstances where if a person is putting down enough money, if they have high credit scores, if they have reserves in the bank, These are what's called compensating factors. And those are things that an FHA manual underwrite where somebody could get approved even if they got turned down somewhere else. So those are always possibilities. VA, minimum credit score, there is no minimum credit score on VA. As a veteran, you could be down to a 505 credit score and you can still get 100% financing. It's kind of the same situation though, as far as it would probably turn into a manual underwrite situation, and they would have to have compensating factors. What they're looking for anybody who goes in any type of manual underwrite, whether it's VA or FHA, they're going to have credit that's clean for at least the last 12 months, relatively clean for the last 12 months, maybe 130-day late. It's for your buyer who maybe had bad credit, maybe they went through a divorce, maybe, life happens, right? And stuff happens. So it's for that person who went through stuff, got bad credit, but is rebuilding it back. And it's kind of on that path to rebuild it back. I've got a buyer right now, they're buying like $725,000 here in the Sugar Land area. They're coming from Reno, Nevada, and they're putting down about $500,000. Their credit's good, but they had a bankruptcy within the last 2 years. And Fannie Mae will automatically reject that and refer that off. But because of their compensating factors, because they're putting down so much money, because of their credit, because they have so much reserves in the bank, they're going to be able to get a FHA manual underwrite and get the financing that they're looking for. There's USDA too, right? USDA, the loan to value, the max loan you could do on USDA is 100% financing. So those are awesome loans, but those are they're geographically restricted, and their intended use is to help people in rural areas get 100% financing or minimum down payment with low interest rates and low mortgage insurance. Those are really cool loans, but they're geographically restricted, and they're kind of going to be more in rural areas. If you're not in that area, you probably wouldn't run into it too much. Let's talk about down payment assistance programs, because I know a lot of people always ask about down payment assistance programs. So as a mortgage broker, I'll be the first to tell you guys that our Achilles heel on the side of a mortgage broker, and whenever you're dealing with a mortgage broker, is probably going to be down payment assistance programs. Down payment assistance programs are programs like TSHAC, TDAC, SET, Chenoa, the programs that you hear about. What most buyers say first-time home buyer programs, they're normally referring to down payment assistance. They just don't know which variation of it that they're referring to. And there's different ones out there. Those entities basically are nonprofit entities. There's City of Houston, there's Harris County, Fort Bend County's got one. And we can work with those, and those are fine. But the ones that are like SET, TSHAC, TDAC, and Chenoa, well, SET, TSHAC, and TDAC specifically, and the reason why I mentioned those because those are very, very popular, and those usually have the best terms. And those type of entities are nonprofit entities that are Texas entities. What a down payment assistance program does is it will give a homeowner 3 to 6% of the loan amount at a maximum of $15,000 that can be applied towards your down payment and/or closing costs. Okay. Now, the downside about the down payment, and that's great. It's great for people who absolutely have no money and have no ability to save money. The downside about the down payment assistance programs is that they raise the interest rate depending on how much assistance you take. They take your rate, they raise it by about a point to a point and a half. So let's say the going rate is 3% on a conventional loan with 97% loan to value. Okay, so it's a conventional loan, it's going to be 3%. We're going to add a down payment assistance program, and let's say we max it out, right? So they're going to get assistance, and it's going to take care of their down payment. So it's going to, 3% will take care of closing costs, but it's going to take their 3% rate up to 4.5%. Okay, and usually those programs have a 7-year recapture tax, and that basically means is that within the first 7 years, if they try to pay it off or refinance it, that they would be penalized, and they're going to be asked for those funds back, or a prorated amount of those funds back, those grant funds. So they also add about $500 more in closing costs per transaction. So those programs are good, but if buyers do have the ability to put down the down payment, if they do have retirement funds that are 401k that they can use funds from that, it's going to put them in a better loan long term. And that's why we take the time to ask buyers all those questions and try to understand where they're really what they're trying to accomplish. What are their life goals, right? I mean, if they know that they're going to be buying a house and they're going to be relocating the next 5 years, then maybe some of these things won't make as much of a difference. If they know they have to sell in a few years, they may not want this program because then they're going to be penalized for paying it off too soon, right? So we go through a lot of those questions with them. When I talk to people about down payment assistance, a lot of times they'll decide to try to find a resource to pay that 3.5% down or 3% down to get the lowest rate possible, especially now because rates are historically low. What else did you guys? Okay, rehab loans and construction loans, 203Ks. I get those questions a lot. So those programs are out there. You know, there's the FHA 203K. It's just like the FHA 203B, where a buyer's putting down 3.5%. But what's cool about the 203Ks is that it does allow for a homeowner to make repairs to a home that they find that would not normally pass FHA appraisal because of the condition of the home. It'll even allow somebody to, if let's say you find a home and it's got a fire and it's got an existing pool, and the pool is messed up, it's not functioning properly, you could have an FHA 203K, fix that pool, fix that house, and qualify that buyer with still 3.5% down. They also have programs like that for conventional loans. One's called a conventional home style. Conventional home style is the equivalent of the FHA 203K for rehab loans. The benefit of that one is that it allows for luxury items. That's basically what that means, is that you can actually add a pool. You could add a tennis court if you wanted to, if the market value will support it. That's the key, is that the market value has to support any rehab work that's being done on any of these type of loans. So the after repair value is what's considered whenever they're doing these type of rehab loans. They also have them for VA. There's VA rehab. There's construction. The only problem with rehab loans, guys, is what I'll tell you is that they do take, normally you want to give at least a 45-day turnaround for those. They're a little bit more complex. There's a little bit more closing costs involved for the buyer. They do have to get the contract approved, the contractor approved. You have to get the project itself approved. And then you have to have a contractor that's willing to work within the system that the lender provides so that they can get their draws and then also fill out pertinent information that the lender's going to want to know about throughout the process.
Chris.
Yes, ma'am.
There's a question that they want to know about teachers and firefighters down payment assistance. Should your company do that?
So we have a program for that, but the most popular one that people hear about is called Homes for Heroes. And that's under that TSHAC. And that's kind of what I was telling you guys about. That's, I don't have access to that Homes for Heroes program, that specific one. What I will say is that one is very competitive. And if I have a buyer and you guys were to send me a buyer, I do have colleagues and people. I've been in this business for a long time. I've got buddies and friends and women in the industry that I will refer business to, that if I do have a buyer that specifically needs those programs. So yes, I mean, I could get them to them after, I've talked to them. If they need that, then yes, I could get them access to that. But it's called Homes for Heroes, and it's under TSHAC. And when I say TSHAC, that's TSHAC. If you Google that, you can learn more about that program. SETH is SETH. That's another big one, SETH. And then there's one called TDAC, TDAHC. If you guys look up those abbreviations, you can find out a lot of information about down payment assistance programs. Probably more information that you're going to actually really want to know, but you can go down that rabbit hole. Any other questions, Vanda, that popped up? I'm just kind of going through what we talked about. I know, one of the things that we talked about today too, Vanda, was the approval process. And that's a great question. Like, what is that process? What does that look like? What does a prospective buyer need to do? So really and truly, the best thing is just have them either send me their information, send me their name, their number, and their email, and I'll reach out to them. Or if they're willing to call me. But the first thing that I want to do is have a conversation with them. The last thing I want, guys, is to have somebody send me a loan application blindly, right? Because there is so much upfront in that conversation that you have with a buyer to really understand, what they're trying to achieve, right? Like I was telling you guys earlier, when I take an application, it's not going to be, what's your name, what's your date of birth, what's your social. It's more like, what are your goals in buying a house? And then you shut up and you listen. It's what's called active listening. And it's actually a lot harder to do because, when people talk to other people and we communicate with each other and we ask a question, a lot of times you're thinking about, okay, something funny, or you're thinking about something clever you're going to say next, or you're thinking about, what I'm going to do is Saturday night, or Saturday I could get out and go do these showings, right? But you're not really listening to the other person. And it's actually really hard to do, but you got to train yourself. And I remember when I first started training to do it, I used to work for a mortgage banker. I'd actually put my head down on my desk and I would take these calls and I would like just tune everything out. And I would just listen to what they're saying because they'll tell you everything. You know, people love to talk, right? People love to talk about their families. People love to talk about their kids. Man, when you hear all that information, that's good information. If you know that, you know, they have young kids, then you know that schools are going to be very important to them, right? That's important to any parent, right? If you know maybe that they're teenage kids in high school, right? They're probably if they're and let's say they're renting now in a certain area and the kids are in high school, those kids aren't going anywhere, man. You know, they're going to get mad, right? So that's going to be important to them. So we take the time to really understand where they're coming from, so that the questions are like, you know, what are your goals? Shut up and listen, right? And then, you know, what's your current living situation? You know, and listen to everything they're saying. You know, are they renting? Do they own? Is there going to be two homes? Do they need to sell a home? You know, and they elaborate. You know, they'll tell you. I mean, I've had people tell me, "Oh, Chris, you know, I've got a girlfriend and I've got a wife, and you know, I'm trying to buy a house." I'm like, man, hold on, guy. Maybe you need to figure that first. That stuff out first before you buy a house. You know, like that's what I'm telling you. You want to buy a house and you got a girlfriend, but you're legally married. So, you know, when you acquire any new property, your wife's going to own 50% ownership of that. He's like, oh, like, yeah. So is your girlfriend going to be okay with that? Right. So, but these are questions we want to get out now and not 2 weeks before closing. And, you know, so they don't, because they didn't realize the implications of something that they didn't know about. You know, people don't realize the importance of, you know, certain things, or maybe they had a bankruptcy 3 years ago, or maybe, you know, they, whatever, something came up and they're not telling. So we try to get all that information. You know, what's their current, what are they currently paying? You know, what's their expectation on what they're going to pay monthly? You know, we just go through this, but what do they do for a living? You know, really take the time to understand, you know, who they are, where they're coming from, what they're trying to achieve. And, and that's the approval process, you know, and then if they, I'll tell them, I said, look, it sounds like we can help you out, right? The whole idea is to gain their trust, is to break down all those layers of defense that we all carry around and make them feel secure and understood. If we can all do that in our businesses and make our counterpart feel secure and understood that we're going to take care of them, they're going to go with us. They can go with, there's banks, there's 10,000 loan officers, there's Quicken, Rocket Mortgage. You see this stuff blasted all over. I mean, there's 34,000 realtors in the Houston surrounding area, right? So why is somebody going to go with us versus somebody else? It's because they feel secure and understood that we're going to take care of what they're trying to achieve. So that's the approval process. You know, whether when they feel that they're ready, I'll send them out the loan application. And you know, the way that works is they get a loan application and it's an email. It'll have a link. I've got a portal where they can fill out information. It's all encrypted. I do, you know, so you guys, you know, I do charge for credit reports up front. I pass that cost on to the buyer up front, you know, and I never get pushback on it. I tell them, look, here's a situation. I'm an independent loan officer. I work under this mortgage broker umbrella. A lot of my competitors do charge for the credit report at closing. A lot of my competitors do is they charge $100, $150 at closing. And what they're trying to do is make up for stuff that did not close all year long. What I do is, as an independent loan officer, is I just pass on the exact cost. I don't profit off it at all. The cost is $39, and actually when they get charged, it's charged directly to my third-party credit provider called Sarma. So I tell them you're going to see SARMA on your debit card statement or your credit card statement, and that's $39. That's your credit. I said the good thing about it though is that because I am under this mortgage broker umbrella, I have the ability to shop your loan to multiple lenders without having to pull credit over and over and over and over. So that's one of the benefits. And the other good thing is that it's good for up to 90 days. So I won't have to pull credit again for up to 90 days. And it's a one charge even for joint. Like if they're married, it'll be one charge for $39. If they're not married, then we have to run two separate credit reports. And you can have multiple applicants too. You can have up to 5 applicants on one loan application.
Wow.
You know, I think we touched a little bit on the communication between, you know, realtor client. I'll kind of reiterate on that, guys. You know, like I said, I have a team I have a loan partner, I have a virtual assistant, and I have a processor. And I train them, and I overemphasize on over communication, right? So like I was telling you, we have the Monday calls where I try to reach out to realtors. Tuesday, we reach out to everybody on the sales contract and we let them know what's going on. My loan partner does that. Every Wednesday, we reach out to our database We try to do that on a quarterly basis. My loan partner will call on a quarterly basis to our database. That's anybody that's closed, right? What we want to do is reach out to those people and say, hey, just checking on you. Any questions for us? Are you thinking about buying or refinancing or selling in the next year? Hey, Vanda, you got a question?
Yes, can you touch on new construction, how you're competitive with new construction loans?
That's a good question. Yeah, I mean, I get that a lot. And, I tell people, I say, look, I always try to advise the buyer, check out the builder, see what they have to offer. It's not a bad thing. It's even better if they apply with us together because you have the ability, we all have the ability to have your credit ran multiple times for the purposes of applying for a mortgage. It only counts as one hard inquiry. But I encourage them to get something like a fee worksheet or a loan estimate from a builder. And if they want to do that first, even before they apply with me, I will be happy to not, I don't need a loan application. I don't need to run their credit. If they can get a fee worksheet or a loan estimate, and those are universal documents in our industry, guys, fee worksheet and loan estimate. That's the best thing that you can advise your buyers to get from their lender or their builder. And I tell them, I'll tell you what, if you want me to look at it, I'll go over it with you. And I've been in this business for a long time. I'll be the first one to tell them, hey man, that's a great deal, lock it in. Or maybe, and I've seen situations, and usually what I see is that the incentives that they offer, it makes most sense for people who are usually first-time home buyers putting down the minimum down payment, or anybody just putting down the minimum down payment, right? Because then it's a cash flow situation. I may beat the builder by a quarter of a point or half a point. That may save the homeowner $30 to $60 monthly, but if they could save $7,500 cash to close right now, that's pretty big. That's huge. And I'll tell them, I'll say, look, man, you can save $30, $60, but $7,500, I know that's huge. Now, I have other buyers. I've got a buyer right now. He's out shopping $450,000. He's putting 20% down. He sent me the builder's numbers, and it was a difference. They were giving him a $7,500 credit, and even with but they had about $4,000 more in closing costs than what I had normally. So that's something that you got to watch too, and that's why you have to get those fee worksheets or loan estimates, because they can have, let's say, even if they had 2.875% rate, let's say we both had 2.875% rate, but they loaded it with all these closing costs because they're buying down the rate. In his situation, it was 3.125 that the builder was offering. They're giving a $7,500 credit. I was able to get 2.875, and I was able to make a difference of about $3,000. He's a smart guy. He's a numbers guy. He did the math, and over the life of the loan, he's going to save a lot more money with me getting that lower interest rate. So he was happy to do so. So in situations where, like, to answer Vanda's question, I do recommend that they try to get pre-approved with the builder. Let's alleviate that right away, because the last thing I want to do is waste their time. I don't want to waste my team's time or your time either. Was us doing the loan, and then 2 weeks before closing, the builder comes in and says, hey, I got this sweet deal for you, and I lose it, and then it delays the process, or it's just, it's kind of a mess, right? So we try to get that stuff out real early. So the other question I get asked is do I send business to realtors? And I do. If there's a situation where I can. Now, I'm not gonna lie to you guys, I don't have a resource where I have leads coming on a regular basis. That's just not how I get business. Now, I do have some tools that I do make available to my realtor partners to try to help you guys grow your business. And some of those tools are, I don't know if you guys are familiar with list reports. That's one that I'm about to sign up with. I haven't signed up with it yet, but list reports is a really cool tool if you guys are doing listings, where if you put the listing into HAR, literally at the click of a button, the list reports platform or program will pull in all that information and produce about 10 different marketing pieces for you, from flyers to banners to, I think, even like either TV or a radio type of ad or something. It's kind of cool. As I get more information about that, I should have that signed up by next week. I'll get stuff out to Vanda, and she can, I'll get it out to you guys as well. If you guys want to take advantage of it, it'll be free to you guys. It's something that I pay for as a loan officer that helps me grow my business, and I make available to my realtor partners that want to utilize it. The other one that's kind of cool is Home IQ. I don't know if you guys are familiar with that. Vanda, I showed you Home IQ. That's kind of a cool program. And I'll show you guys a report of what that looks like here. That's kind of neat. Home IQ is a great way to stay in contact with your past database, homeowners, or any potential sellers that you've been talking to who are thinking of selling in the next 6 months to a year. And what Home IQ does for a homeowner is it will give them a report every single month, and it'll send it to them the same date every single month, and it'll send about 6 different reports. It'll give them a lot of really pertinent and cool information about their house, such as the current market value, the current rental value. If they wanted to sell their house, it'll show them a little summary of how much they could get out of it. If they wanted to refinance their house, it'll show them how much they could get out of it. I'll show you guys. Oh, you know what? Can I share my screen, Vanda? Is it set up to where I can share my screen?
You sure can.
Okay, awesome. Let me share with you guys what this looks like. I apologize. Let me just I'll call her back. Let's see.
If you guys have any other questions, you can either raise your hand or type it in the chat so he can answer them before the hour is up.
All right, here we go, guys. I'm gonna share with you this screen. And can you see where it's saying Home IQ in the top left-hand side? Okay, good. So what I want to show you guys about this is that this is cool. This is what Home IQ, this is what has gone out. You know, the reports that I've sent out 67. And of the 67, 55 have been opened up, which is 82%. That's a pretty high rate. The ones that actually clicked the report and viewed it are 69%. So of that 67, 46 of them actually clicked the report. And of that 67, 9 of them reached back out to me for some further questions. And that's the whole idea, is if they do have a question, they're reaching out to me. They're not reaching, and the cool thing about this platform is that if I sign you up for it, that you'll have your own portal where you can upload your own database. You'll also be able to put people in individually, and you'll be able to also track it. So if you see that they viewed something or opened it, or that they requested information, you can contact them back. And if they're requesting information, like I had a few people reach out and ask me about the market value. And I reached back out to them. I said, hey man, that's awesome. I see you're using Home IQ. Are you thinking about selling your house in the next 6 months to a year? And he's like, no. I was just curious. It was cool. I was like, oh, okay. I just wanted to make sure. Right. But, it's just staying in contact. Right. So they get this every single month. It's branded with you. It's branded with me. I'll show you what a report looks like. So let me generate a report. This is for Benjamin Santa Maria. I closed him, I think, about 2 years ago. And this is what he gets when he opens the report. It says the estimated equity in your home is 52,000. Looks like you've gained 43,000 since your purchase. I'm sure he's happy about that if he saw this report. It says your estimated worth to be 271. He can ask questions if he has any questions, and that's what it will alert me. If it's one of your clients that you've put in, it'll alert you if a question comes in. Cash you may be able to put in your pocket if you want to cash out refi, it'll show him potential of what he could. He doesn't have enough equity to hit the 80%. If he were to sell his home, it'll show him what he could possibly net from selling it. It'll give him some potential title fees, the recording, the agent commissions, and kind of give him an idea of that breakdown of what he could if he wanted to sell it. Ask more questions if he wants to. It tells him about his mortgage insurance, tracks that for him. If he wanted to escalate his payment, it shows him like, hey, if you put $250 more, you can save $41,000. You get paid off sooner, 8 years, 3 months sooner. If you wanted to raise it to, let's say, $500, $450 a month, he save $59,000, and it'd help him 11 years, 11 months sooner. So it's kind of fun stuff that homeowners may want to look at, that they're interested in. A lot of times we have stuff that we keep in contact with our database that's fluff, and fluff is cool too, right? But stuff like about painting your living room orange and yellow for spring, and that's cool. But this is more, I don't know, numbers, right? Pertinent numbers about their investment, the biggest investment that they have. So I think they like this one. Apparently, I don't know. It seems like the click-through rates are pretty good on it. So, any questions about that, Vanda?
No questions here. Someone did ask, do you write a blog that they can share?
I don't. I wish I had the time, guys. As I'm getting new people, I want to start getting more things in place for education. Like maybe a YouTube channel where people can go and learn. Because I want to tell people. I was having a conversation with a buyer yesterday, And I was telling her the difference between borrower paid commission and lender paid commission. You guys may not be familiar with that, right? But that's how we get paid in our industry as mortgage professionals. I could do what's called borrower paid origination. I could do what's called, borrower paid commission or lender paid commission. And that's very important to a homeowner because it can have a huge impact on their interest rate. And I told her that. She's like, Chris, I don't even know all that. I don't even know what you make. That's your business. I'm like, no, man, it's your business too, because it could affect your rate. I said, you should ask that to a loan professional. I said, I'm very transparent about it. I said, look, here's the deal with lender pay commission. Basically, what that means is that the commission is built into the interest rate, right? So the commission is going to come directly from the lender that I broker it to, and it's probably going to result in a very high rate. It's very difficult to be competitive right now. But you'll see that, like, sometimes if buyers are out there getting different offers, or they're getting different estimates from different lenders, you may find one that's got a pretty high rate, substantially higher than some of the rest, but maybe lower closing costs. That could be somebody who's going through that situation. What I do a lot is what's called borrower paid origination. And basically, it's a way for me to get the homeowner the lowest interest rate possible. And basically, what that means is that I set their interest rate and I'll charge them a commission, but it's kind of like a sliding scale. And what I mean by that, what I told the homeowner I was working with yesterday, I said, here's the deal: is like, I was helping her son out, and I said, your son, what I'm going to end up doing is like, maybe the rate that I can provide for him for what he's trying to accomplish. I think he's got an FHA loan, first time home buyer, he's got like a 590 credit score, not strong credit. I told her, for example, that let's say the rate is 3%. Let's say that 3% pays out a lender credit of $4,000. Okay, I told her what I would do is I'll probably charge a $4,000 origination, and it'll be a wash for her. It won't be any additional costs. Now, at the same time, I told her your son has a choice. So he could say, hey, man, I want to buy down that interest rate. I'm gonna keep this house forever, or I'm gonna keep this long-term investment, and I want to rent it out later on, and I want to grow passive income. So he wants to get the lowest rate possible. That's cool. So maybe he wants to go down to 2.5%, and it no longer creates a $4,000 credit. I'm still going to charge $4,000 origination, and maybe he's just okay with paying that origination, and he's getting no lender credit at that 2.5%. I know it's a little bit confusing, that concept, but that's essentially, that's why I tell people, I give you the option as a homeowner. You can buy down your interest rate. You can create a lender credit. On the flip side of that, buying down 2.5%, you can go higher up to 3.5%, and you can create what's called a lender credit. Maybe now you're creating, instead of $4,000 at 3%, now you're getting $6,000 at 3.5%, and that's money that can go towards your closing costs. I'm sorry, guys. I know that's confusing. I think I was confused myself on that one. Any questions about that?
Well, a lot of lenders don't talk about buying down the interest rate. I know that's one of the things that another program that I know, they can get like 1.75% interest. And they're like, how are they doing that? Well, they're buying down their interest rate. So
Absolutely.
for every, what, quarter of a point is $1,000. Is that correct?
No, it differs per lender.
Oh,
I
okay.
mean, it really does. What I do, because sometimes they'll have different buy down costs, and
Okay.
one will be more competitive than the other. I had a veteran who, I got him a 30-year fix 2 months ago at 1.99% on a $600,000 loan. He paid about $12,000 in on top of his normal closing costs. But this is his last house. He's like, man, I'm not going anywhere. And he's going to save, like, I think it was like, when we projected like $80,000 to $90,000 for that investment of 12 grand that he did with his closing costs. So
So
yeah, I mean, it can make sense for the right person. But if it's not a long-term investment, I never really advise buying down the interest rate, to be honest. Because even what you buy down, let's say you're buying down from 3% to 2.5%, and you're paying $4,000 to do so, it may save you $30, $40 a month. I mean, that's good. And over a long-term period, it's great. But I mean, I'd rather use that. What if you had a $4,000 credit card that you could pay off that has a $150 monthly payment? I'd rather them take care of that and extinguish some debt. So we always want to try to advise people, depending on their circumstances, their situation. It's a younger couple and the first-time home buyers, and they're buying new construction. Then there's expenses that they may not expect: furniture, appliances, right? Window treatments, right? Sometimes they don't even think about window treatments. So just those additional things we want to make sure that we're helping them understand and setting their expectations.
okay.
And then, you know, I guess one of the questions I get, or I know Vanda was asking me too, what would be like good advice for new agents? You know, anybody who's kind of new, you know, when you're talking, I think the best advice and the advice I give to my my people that I train, you know, my loan partner and my processor, is that just remember at the end of the day, it doesn't matter, you know, your people's age, their race, their religion, their financial status, their education. At the end of the day, you know, we're all human beings. You know, we all have certain reactions to certain things. You know, we all have, you know, we all feel the same way about certain things, right? You know, if we have children, right, we all feel the same way about our children, right? It doesn't matter. So, you know, when you're talking to people, like I try to tell people, just like people I train, to be open. Don't assume anything. You know, when you assume something about somebody, you're leaving stuff on the table. You know, like I was telling you guys, I was sharing with you guys, I follow a guy named Chris Voss, and he talks about finding a black swan. And finding a black swan, you know, the way it's taught by Chris Voss and the Black Swan Group is finding a black swan is like the black swan is it used to be a saying in England. And I think it's like in the 1800s. The black swan was considered like something that you would never possibly be able to see. You know, like a unicorn, right? So what Chris Voss talks about is try to find a black swan, and finding a black swan is when you have a conversation or your negotiation or you're interacting with somebody and you just ask a lot of questions. You're really trying to understand, right? You're really trying to understand their point of view. And by asking all these questions and really taking the time to understand their point of view, you may find out this piece of information that you never knew was possible, something that could benefit you in your life, right? I mean, it could be maybe you find out that, you know, the person you're talking to has got a brother who's a admin at UT Austin, and you've been trying to get your kid in to UT Austin, right? You just found this connection to that person that you never thought you could find, but you did it because you were open and you asked enough questions to really learn about that person. That's what's called finding the black swan. You know, so that's probably I think my best advice is, you know, try to find that black swan, man. Try to be open and see what you can find. Hope that makes sense.
Good advice. Anybody else have any
Yeah.
good questions? You can take yourself off mute if you do.
Any other questions for me, Vanda?
Doesn't look like it.
Okay.
I think
Thank you guys.
I think
I
you're
appreciate it,
good.
guys. I appreciate your time. I know y'all busy.
Yes,
Awesome.
thank you.
Yeah, I'd love to be a resource for you guys.
Chris. Thank you very much.
You're welcome.
I think you covered a lot, and that's why I don't have any questions. But I wrote down your information to contact you for anything that may come up. But thank you for being with us, and thank you, Vanda, for organizing this every Saturday. I'm happy to be
You're
back.
welcome.
Thank you very much.
Absolutely. Yes.
Thank you, Mr. Chris.
Have a great weekend.
You're welcome. You're welcome.
Thank you.
You're welcome, guys. Thank you. Thank you for your time.
All right.
Thank
bye.
you.
Contact me if you need me for
guys.
anything.
Okay, thank you, Vanda. Thank you so much for setting this up. I'll be in touch.
All righty.
Okay, I'll see you guys later. Okay.
Thank everybody. Bye. Have a great
Bye-bye.
weekend.